Welcome back, guys. Once again, Pips of Africa is in the building. So in this video, I'm going to be talking about the Wyckoff schematic. What is the tip that you need to get in order for you to successfully trade Wyckoff schematic, right? So I'm here to give you the tip of how to successfully trade the Wyckoff schematic, how to know that Wyckoff schematic might occur, right? It's going to be, so it's going to occur. How to know that? Simple, very simple, right? This is what you must take note of. This is what you must take note of. I'm going to be making examples here. I'm going to make examples of how to tell if the order block is going to occur or not. So the price was going up like this, and then it suddenly went to the downside like this, engulfing this kind of stick here. So I'm going to change this one. I'm going to make these ones red. And then here I'm going to do this, and then I'm going to quickly change this one like this. So this one is going to engulf the bullish kind of stick here, and then continue going to the downside in this manner. I'm just making an example here. In this manner, remember that we have left this order block here, the order block on this side. When you draw the trend line like this, right? So we left this order block here. All right. So now what we have to do, what we have to take a look is that this is the order, this is the 1 day order block. Let me show that. This is the daily order block. I want to show you how to know if the order block is occurring or not, if that's a true Wyckoff schematic or not. This is the tip of Wyckoff schematic. This video is going to be short. This Wyckoff. No, I'm trying to say this is the 1 day order block. This is the 1 day order block or the daily order block. So what we have to do is this, because you see that the price is continuously going to the downside like this. So let's say now the price is going up. Let's say the price is going up now. It's approaching the daily order block. It will approach the daily order block in this manner, right? It won't engulf this one just like this. It won't do that, because that simply means that the price is going to be breaking this order block here. It will bounce a little bit and then continue to the downside like this a little bit, then continue breaking up. But we want to see the healthy price action. We want to see the price approaching the order block, slowly approaching the order block, or healthy approaching it like this. Right, want to see the price slowly approaching the order block in this man, going up like this, coming back down like this, right? Coming back down, like creating the lower, the higher low, going up once again, going up once again, while the price is still here, underneath here. While the price is still underneath here, that's when you start going to the smaller time frames or the time frames. You are seeing the daily order block, the daily bearish order block. That's what you see. You see the daily bearish order block, but you can't take your trades based on the daily time frame, right? You have to go down to smaller time frames. But this video here is about the Wyckoff schematic. How do you then take a trade based on the Wyckoff schematic? That's the question that everyone is asking themselves. I'm going to make this video simple, very simple and short, right? We also saw that here the market broke the structure to the downside here. It broke the structure to the downside. The interest of the big banks is to the downside. They want to go to the downside. So you can see that the price, it took 1, 2, 3 candlestick to go to the downside, meaning the full momentum is to the downside. The full momentum is to the downside. And then the price took 1, 2, 3, 4, 5, 6, 7, 8, 9. You can see that this is not a real move. It's just a retracement. When the price is printing so many candlesticks to approach your daily, your order block zone. That is another confirmation that the price wants to do what? To respect. It is not going to violate the order block zone. You count the price, the number of candlesticks that the price printed when it was leaving the order block. You count the number of candlesticks that the price printed when it was leaving the order block zone. You can see I've counted them. We had the one, counting the Paris candlestick, 1, 2, 3. We have only 3. But when the price is approaching your order block now, it is printing so many candlesticks. That is another confirmation that the price will not break your order block zone, right? So you must trust that order block, but try to implement another confirmations, another rules. That's what I'm trying to say. So your order block is above here. This is a daily order block. What you have to do is this one. I'm giving you a tip now. So stay with me. This is the daily time frame, by the way. But now let's say we are going down to smaller time frames, like 4-hour time frame, because we are looking for a schematic. We're looking for a reason to take this trade. We want to see a Wyckoff schematic or a distribution being formed, right? Being formed. So now let me try to erase this one and write the 4-hour order block. Now we're at the we're on the 4-hour order block. So this one is the H4 OP. OP stands for order block. So what you have to do is this one now. So you will see something like this underneath. Let me try to erase this one. Pretend that these ones are still here, but I want to show you the Wyckoff schematic. I want to show you the examples of how to check the trade on the Wyckoff schematic. Remember, on the daily time frame, you need to mark the 50% of the order block. That's what you have to do. You need to mark what? You need to mark the 50% of the order block. So let me try to do it now. So this is your 50% of the order block zone. The 50% of the order block, I believe it's here, because this is just for the sake of for educational purpose. So now this is the 4 order block. But now what you have to do is this one. Let me try to. All right. So let me just leave it like that. But this is the 4-hour time frame. This is the 4-hour time frame. This is the 4-hour time frame. I'm trying to make this thing simple for you guys. Let me just write the Wyckoff schematic. Wyckoff schematic. Wyckoff schematic. Try to do this one. Wyckoff schematic. All right. So now what you have to do is this. Oh, so here let me just write the H4, the H4 OB, the H4 time frame, the H4 chart. H4 chart. Okay, all right. So now once we have these things, remember, I'm teaching the techniques on how to trade the Wyckoff schematic, how to see if there's a Wyckoff, how to check the Wyckoff schematic. This is the beautiful zone where you can check the Wyckoff schematic, where you have the daily order block, and then you go down to H4 time frame, you look for the Wyckoff schematic. Let me show you that, because the order block is on the daily time frame, but the Wyckoff schematic cannot be on the same time frame as the order block. Let me repeat that. If you have spotted the daily order block or an order block on the daily time frame, you can't be expecting the Wyckoff schematic to be formed, to start forming on the daily time frame where you have spotted the order block. But you need to go down to smaller time frames. You can go to 8 hour, but I prefer starting from the 4-hour chart down to 1-hour chart, right? So you go down to 4-hour time frame to look for Wyckoff schematic, a reason to take the trade, right? A sign that the market is going to be selling in due time, so in due course. So now the market is still underneath the order block zone. You go down to smaller time frame. When the market is still underneath, I'm talking about this zone here. I'm sorry about that. So I'm talking about this zone here. When the market is still around this zone here, when the market is still around this zone here, it's playing underneath your higher time frame order block. You must go down to smaller time frames, and then you look for Wyckoff schematic, the reason to take the trade. So this is the tip of how to trade a Wyckoff schematic, because you can't be looking for Wyckoff schematic everywhere, but the one that are reliable are the one that happens underneath or above the higher time frame order blocks. That's how you trade the Wyckoff schematic. Let me show you the good example of that. All right. So here you have this thing here. They say the price is pushing aggressively like this, starting to exhaust, giving us the buying climax. This one was the PSY terminal supply, buyer's climax, It giving us what? The automatic reaction. After that, it gives what? The sign of the secondary test, the sign of weakness. And then it gives us what? The UT. The UT is here, right? And then the price will try to retrace a little bit here. And then it would move to the upside, mitigating the higher time frame order block before we see the big shoot to the downside, creating another sign of strength. Then the price will be leaving tons of order blocks here and many order blocks around this zone here, right? The price will be leaving so many order blocks there. So let me try to make it clear. The price will be leaving so many order blocks around this area here. And then the price will be forced to move to the upside to mitigate the order block here. There will be an order block and then the price will mitigate it and then continue going to the downside. This is how you trade an order block, because here you have the trying to label this thing. Here we have what we have the terminal supply, which is above here. Because after the strong push, the price will try to exhaust, giving you the terminal supply. So here we have what? We have the terminal supply. And then here we have what? We have the bias climax. Above here. We try to apply this. We have what? We have the bias climax. Right, buying climax. And then here we have what? We have automatic reaction. Then we have what? We have the secondary test. Here we have what? We have the sign of weakness. Here we have what? We have the upper thrust. We have the upthrust, which is also known as a UT, right? And then we have what? You finally have your UTET. Somewhere you have your UTET, after distribution. So this is just an abbreviation of that. So you can see you have the terminal supply, buying climax, automatic reaction, secondary test, sign of weakness, at the upthrust, and they put a little push to the downside, but not breaking any lows. And then you come, it goes to the upside, creating the UTET, the final push to the upside. You have to see the divergence of the RSI. Because this point, this one here, sorry, I'm going to try to delete that. And the price will give you another sign of weakness after the UTET. The sign of weakness, the second sign of weakness after the UTET. So now you have to take your trade above that. You have to take your trade when the price created, after the price has created the UTET. You can just take your trade right here. Then you write the trade, you write it to the downside, right? And then you have to also wait for the price to go back if there's another order block there, according to 4-hour time frame. Come back there, mitigate the 4-hour order block, then going to the downside. So this is how you take your trade here. But your stop loss must be according to the daily order block, because this one is just telling you the schematic. It tells you that the price wants to go to the downside. That because the big banks, the market makers are now placing their sales. They started placing them around here, right, on the past climax. But they push the price to the upside, right? They're still placing their sell orders. They wanted to get into to allow the retail traders to get in the market, right? To start participating. Because the past climax, when you join it with the second test, it creates the powerful supply, and it creates the supply which looks good, because we have the first touch, second touch. Retail traders will be waiting for the third touch and then waiting to short the market here. But the market won't do that, right? The market makers will not do that. They won't allow the price to do that. They don't push the price to the opposite direction, right? Because the retail traders, whom they are trading the support and resistance, they want the price to respect this area here, but the price will not respect this area. It will push above, manipulating them, taking them out, right? So here you can see that the price, after tipping into the higher time frame order block, it will tap there using the UTET. Let me emphasize that the price will tap into the higher time frame or the daily order block using the UTET. Only the UTET that is allowed to push to get inside the higher time frame order block. So that's all for today, guys. I'm not going to be prolonging this video. So, but now let me just go to the good example that I've spotted on the USD ZAR. So this one is a good example. So I have to go there and teach you these things. So the first thing that I need to do, I need to start by deleting these things here, the drones. Right. Because I need you to understand what is happening here. Because this is the good example of what I'm teaching about here. So right now, what I see the daily order block. I see the daily order block here. Let me try to make it like this. Right. So now I see the daily order block here. This is the daily order block. Let me try to mark it up so that you'll see what I'm talking about. So this is the daily order block here. This one here. Okay. The daily order block, which is here. Right. So this is the perfect example of what I'm talking about. This is a daily order block here. And then here, the price was going to the upside, right? Breaking the structure here. Let me show you that. The price broke the structure to show that the price is going up at this moment of time. But then the price, it also broke the structure here. It broke the structure here. All right. It broke the structure somewhere here. What do you think is happening here? And then the price broke the structure just like this. So you can come here and check what is happening on this low. Okay, let me delete it and try again. Well, you can check what is happening here. Right, on this low here, what is happening? Sorry. So you must come and examine this area here. You must come and check this area. What is happening here? Because even here, there's an order block. You must not forget that. There's an order block even here. There is this order block. All right. So we want to see the price coming back around this zone here. It can shoot up if it wants to. But what we see is an order block here. All right. So we want to confirm it if this order block is good or not. You see the wick is below, is longer than the wick of the bullish order block. I've talked about these things here, how to test if the order block is strong or not strong. You can see that the bearish candlestick has the longer wick than the bullish candlestick. So that is the first thing that makes the order block valid and strong. You can see in this one, this is the bullish order block and the bearish order block. On the bearish order block, we have the wick of the bullish candlestick is longer than the wick of the bearish candlestick. But I'm not there. I want to show you the Wyckoff schematic. This is the lesson of the Wyckoff schematic. You can see this is the daily order block. This is the daily order block. The daily order block, or going to call it 1 day OP. 1 day OP. So after doing that, the second thing that you need to do, because you see the order block on the daily time frame, you can look for Wyckoff schematic on the same time frame that has an order block. You saw the order block, or you have spotted the order block on the daily time frame, and then you have to go down to 4 time frame and then check what is happening on the 4 time frame. That's when you're going to see the Wyckoff schematic being occurring there. All right, let's go there. Let's quickly go there. I don't want to talk too much, because I'm also thinking about your data bundles, because I don't want to chow your data bundles. All right. So what you see, let me try to go there to the line chart and see what is happening according to the line chart, right? Let me go back. You see here, there was this push, the strong push. This was our bias climax. This was our buying climax. So I'm going to put it here, the bias climax. So it's going to call it a BC, stand for buying climax. Number 2, what do we see here? We see the push above the bias climax. There's a push above the bias climax. So going to call that, no, that one is a preliminary supply. I'm sorry about that. The preliminary supply. All right. So here is the price climax. I'm sorry about that. Just that's what I want to quickly finish this video. So here is the price climax here above here. So the price climax, you can see that the price climax is above the primary supply. So we're going to start by seeing the primary supply. That is when the price will start to exhaust, right? The retail traders would think that the price is now starting to sell. It's now selling, but in fact, the price is not selling. The price is accumulating the smart man orders here. The smart man orders, they pretend as if they want to push the market down at this point of time. Yes, they want to push the market to the downside, but not now. They want to manipulate the retail traders. All right, so let's go, guys. So now this one here with the price climax is always above the primary supply, right? This thing is happening below the higher time frame order block. This thing is happening where? Below the daily time frame order block. So that's what I wanted to clarify with you guys. So now let's get into it. So now we have the price climax above the primary supply, and then we're going to have what? The automatic reaction. You're going to have what? The automatic what? Reaction. Below here is an automatic reaction. After having the automatic reaction, what we are going to have, what we are going to see, we are waiting for the secondary test. Do not listen to people who are going to say to you, Wyckoff schematic is useless. It is not useless. It is going to save you from taking trades early, right? Well, another thing is this: buying climax, I mean the secondary test has to be below. It must not go above the buying climax. Buying climax is below the primary supply. It is also below the primary, it is also above. Buying climax is above the primary supply. It is also above the secondary test, right? Secondary test is below the buyer's climax. So after that, after having the secondary test, we're going to be expecting, we're expecting to get what? To get the secondary, the sign of weakness. This is the first sign that the market is going to be selling. And then this is what you must do. You go there, you label the sign of weakness. This is the first push to the downside. This is the first break of market structure. The sign of weakness. The first break of market structure to the downside. Now, this sign, it shows us that the market wants to go bearish. But we understand that as a smart man traders, we know that above this also consolidation here, this is another form of consolidation. I've talked about so many types of consolidation before, but this one is a Wyckoff schematic. So now the price is currently raging. It is even broke the structure to the downside, right, in the form of liquidity grab. And then that liquidity grab was a sign of weakness, and then the price is currently pushing to the upside. Now it has already given us what the upthrust, which is the UT. Upthrust, it shows us that the price, it is ready to go to the downside, but we need to expect the big push that is going to go inside our daily order block. So that's all, guys. That's all we have to take a look at. So now, if you check there, you would see something like this. You understand that the price wants to go and mitigate the daily order block. Daily order block is this one here. As you can see, 1 day order block. I've marked this zone according to the daily time frame. So the daily order block is here. Then the price is currently accumulating orders here, sell orders here. The price it will indeed buy up until this price here. Let me try to change this one and use it as a whole number. Let me put 40 here. Right? Let me see what happens if I say 400. All right, let's say it's 400. Let's say it's 3,400, 15.3400. So now the price, the only thing that is remaining here is an upthrust. Is an upthrust after distribution, which is the U10. One thing that is remaining is that one. So the price, yes, it can go above a little bit and then push down like this, and then push up aggressively, right? Leaving an order block, leaving an order block somewhere here, right? and also do what? And move to the upside. Right? Like this, creating another sign of weakness. Right? Creating another what? Another sign of weakness. Then the price will go up like this, in this manner. When the price is approaching our order block zone, we need to see the price moving like this. And then finally mitigate another block, and then you see the big drop to this zone here. If you still remember this zone, the bullish order block on the daily time frame, you still remember this zone, right? So this is what we have to see on the smaller time frame. This is how you trade the Wyckoff schematic, guys. So this video is going to end like this because I don't want to see it taking long, because I'm also thinking about your data bundles. I don't want to see the video to take long. So now what I want you guys to go and practice. Another scenario is where you see, okay, the point of me doing these videos, let me try to delete the drones. Right, why am I doing all these videos? Guys, take a look here. Check this thing. Check this thing here. You see that here, the price was bullish all along. It was bullish. But what happened? What happened here? This was the push higher, the push low, the push higher. Okay, let me bring back my drawings. I want to show you the mitigation block. The push higher, the push low, the push higher, push low. Okay, let me use this one, the push higher, and then finally violated the area. But this one, it doesn't look good to me. Let me try to use just the simple drawings. Okay, so you see the push here. You see this push from here. Okay. The push higher. The push down. Push higher. Push down. The push higher. Push down. It tried to go up, but it failed. It pushed to the downside. To the downside like this, right? So it failed to push, to continue with its bullish momentum, right? So we can expect the price, the market. Okay, let me try to delete these things. Try to delete everything. Okay, so now you can see that here already, if you join these points, I'm going to ask you about these things when they happen. All right, so we also have, because this was the low, which was supposed to be pushing higher than this high, but it failed above here. Right, let me put it here. Right, so according to the mitigation strategy, the price was going bullish, but it broke this low here. Right, it broke this low here. So at this low, we also have, it is corresponding with this order block. Let me show you that. So we have this order block here. Right? So the market, it left this order block here, which you see here, which I've marked, which correspond with this low. according to the mitigation strategy, where the high, where we have the failure swing high here, where this high failed to push above this one here. And then this low here, it got broken. So this is what we call a mitigation. So we mark this low and the failure swing high. We mark the failure swing high and the low that was broken. You see, it was broken like this. We didn't get the touch, the move back to this low that was broken. This is corresponding with this bearish order block according to the 4 hour. So we marked it up. So expect the price to come around this zone and then continue to drop to the downside. So that's all we're expecting according to this pair. So these are another point that we want to see. All right. So thank you so much, good people. I hope you got everything that you wanted on this video. So I hope you're going to like this one as well, like another videos that I've created so far. So please like and share this video with everyone who's willing to make money. And you can even come here, you check for the, you know that the price was going bearish. And then here, this video was for the Wyckoff schematic, guys. But now I'm done with Wyckoff schematic as I've shown you everything. Now I was just showing you the entry, how to enter, how to also use another confirmation. As you have seen me doing it here. You see, I was also confirming this trade using the mitigation block that I was doing, that I was explaining to you on my past videos. So I used, there's a daily order block here. There's also a failure, the mitigation block somewhere here. There's also a bearish order block, daily order block, the mitigation block. So this is this point here, this one, and this one. So actually this one is a 15 to 2970, this point here. And also this one here is how much? Is 8.15.37385. So these 2 points here are our point of focus. And also this bearish order block here. There's a mitigation order block, daily order block here, 4 hour order block. So there are so many reasons for us to take a trade here. And then there's also a Wyckoff schematic somewhere here. It means that, let me tell you this. It means that if you want to take a trade, you can't take a trade if you have one confirmation. You need more than one confirmations. You need 2 or 3 or above, right? You need so many confirmations that will help you to take only high possible trade, high possible setup. So this video here, it is going to end like this. This video was about Wyckoff schematic. It was only about the Wyckoff schematic. I hope you got everything that you answered. I've answered all your questions. And also I have to come back. I'll come back with another video where I'll be showing you how to trade the market using the indicators, because some indicators, you use indicators to confirm what the order blocks are showing us, what we have seen in using the smart man concept, you see. So we use them just to get an extra confirmation, right? You need to use the analysis according to the smart man rules, and then after doing that, you can then employ your indicators to confirm. They act as confirmations, right? They work as confirmations. They confirm to us, they give us that extra confidence, right? That this trade is indeed going to give us the profit, the good profit. So this is a Wyckoff schematic. This is the Wyckoff schematic. So once you are good on these things, right? You know order blocks, you know Wyckoff schematic, you know mitigation blocks, you know breaker blocks, you know everything. You know how to differentiate between the bearish trend and the bullish trend. So once you know all those things, you can become profitable. But remember, being disciplined, meaning you have to respect all your rules. Do not violate even a single rule. If your strategy says, if you see an order block on 1 hour time frame, when the price get inside a 1 hour order block, you have to go down to smaller time frame, 5-minute time frame, and whatever time frame that you go down to, right? You need to wait for the break of market track. If your strategy says that, you have to respect that. If you don't get your break of market track to your desired direction, you don't take a trade. That is how you to be disciplined. If you are disciplined, you are likely to become a profitable trade. You apply your strategy, you follow the rules of your strategy. Do not violate even a single rule of your strategy. You must write them down. that the first thing that I have to look for when I'm about to take a trade is this one and this one and this one is 1, 2, 3, 4, 5. And then you have to tell yourself that for this strategy to work out, it has to at least meet 3 rules, right? That is your rules. That is your rule, right? That it has to meet at least 3 rules of your strategy. All right. So remain disciplined. Do not violate even a single strategy, single rule that you have created for yourself, right? So this video was about just a Wyckoff schematic. So I need everyone to become profitable and who's in this channel. Everyone who's been subscribing to this channel has to become successful this year, because I need to have 10 traders that would become profitable already. So in this video is going to end like this. So thank you so much for everyone who has been following me. Make sure you subscribe, you like my channel, you share the videos. Otherwise, until next time, guys. Let's meet next time. God bless you.